had a $50 billion threshold for, systemic risk. That was increased by Congress in 2018 to 250. That is now 7 years removed. And so is that number the right number today based on, thresholds? That said, do you ultimately want a situation where you have deposits moving from smaller institutions to large institutions, right? That is something to consider as far as where the threshold lies. Again, I would also support my colleagues on the panel here of saying that indexing is absolutely paramount because, once you put something in statute, it tends to be fixed, right? And then without an index, you're going to have, an outdated threshold that is, 5, 6, 7, 10 years down the road that is no longer valid. So I would caution on, making sure that there's a proper index of any threshold.
With my remaining 45 seconds or so, Mr. Kelly, how do we make sure that we don't disadvantage smaller institutions under $1 billion? Credit unions also bear that burden, as well as a cost structure that actually works versus one that sounds good but runs more institutions out of business with 30
Yeah, Chairman Scott, real quickly, I think what you've said is important, that we shouldn't pick winners and losers in the banking space. I see the banking space as a system. I'm an engineer by training, and I look at things from a broad perspective. And there is merit to the largest banks that we have in our system, which makes us the strongest in the world. But we also need the capillaries in small towns like the one I grew up in Eufaula, Alabama. And so I would suggest, as we think about this, we apply a process that certainly creates consistency so that the customer is agnostic to which bank they decide to use.
Thank you. Ranking Member Warren.
So thank you. I actually want to pick up right where Mr. Kelly is about picking winners. We absolutely pick winners and losers right now because the winners and losers game is to look scary. Get out of the small banks because the federal government will only step in behind the big banks. And that's not just a tale, that is literally what is happening. And we've watched it happen. Nobody bails out the little guys. They only bail out the giants. And that's not just a problem for banks. That's a problem for how we finance small business in America. Big banks, I get it. They have their role to play. But their role to play is not how to help the local drugstore, is not understanding this local manufacturing business that's trying to get itself started, and you understand the bumps and when the money's going to be there and when the money's not, and you try to work with them and put them on a payment schedule that works. It is these small banks and medium-sized banks that do the handcrafting that kind of work demands. So this policy, excuse me, is not about trying to pick winners and losers. It's about trying to level the playing field again so that depositors understand the bank I work with year after year after year is a place I can safely keep my money even in troubled times. So let me start there. Mr. Harrison and Mr. Rice, you both lead smaller financial institutions. You play important roles in your community. What happened to deposits at small and mid-sized institutions like yours when SVB failed? And does deposit migration affect your ability to be able to lend to the businesses that you want to be able to support? Why don't we start with you, Mr. Harrison, and then I'll come to you, Mr. Rice.
Thank you, Senator Warren. Right after that, there's an intense amount of just uncertainty. We called hundreds and hundreds of our clients. All of my peers did the same thing in the mid-sized banks. We were fortunate. We didn't have a lot of money leave our bank, but honestly, right afterwards, we proactively did some Federal Home Loan Bank draws just to make sure that we had liquidity. Because that liquidity, that certainty of liquidity that's in those operating accounts is what we use to make loans. That's what we use to put back into the communities. And if you're not certain it's going to be there, you have to make sure it's there. So that's much more expensive to go out and get that kind of funding. But we did that. Many of my peers lost significant amounts of deposits in the week after that happened.
So SVB fails and you end up spending a lot of money.
We want to make sure we're safe.
Yeah, I appreciate that you do, but that isn't free.
Yep.
Mr. Rice.
Thank you, Senator. Thankfully, credit unions were untouched during this crisis. It was seen as a banking crisis, but it's not lost upon us that fear doesn't understand the distinction between banks and credit unions. It's the system. So on this occasion, we were lucky, but much like Mr. Harrison has pointed out, that big banks lend out 50 to 55% of the deposits, credit unions lend out 90 to 100% of deposits. So 550 billion is taking out of the small bank and credit union system. That's a lot of loans to local communities that are at risk.
So you really have the potential here to contract the economy. One failure over here causes contraction in lending. Rapidly throughout the system. So tell me about the right number. You two lend the money out. Obviously, I think what you're telling us, what your customers are telling us when they flee, is 250,000 is just not a high enough number. That these transaction accounts that involve payroll and all are above it. Can you just give us an idea of what you think is the right insurance number, Mr. Harrison?
Well, I looked at our customer base and talked to some of my peers, and really in the different, there's hospitals, there's small manufacturers. We just don't want the customer to have to decide. We think that $20 million number covers the vast majority of our operating accounts, so we're very comfortable with that as a group, as our 100 banks and the mid-sized banks. So that's the number we're comfortable with, but 250,000 just does not seem to be enough.
Mr. Rice, how do you feel about that number?
You heard my testimony, Senator, that Rippling had $545 million in their payroll account.
Yeah.
And 250,000 obviously didn't come anywhere near covering it. We also support at least 20 million, but it should be important. I don't agree with the term small business because to them it's the biggest thing in their life, and to call it small is kind of, it's interesting, it's a little demeaning to be honest. And small businesses range up to 500 people in employment, and that's from the SBA, that's our own governmental definition. So it can be above 20 million, but we do support 20 million, but we do think you need to look at payrolls and payroll account companies and think of a way to include them in it without necessarily including insurance premiums.
Thank you.
We do tackle it.
Thank you. Thank you, Mr. Chairman.
Yes, ma'am. Just in case someone's wondering, we did invite the big banks to be here today.
Where are they?
I don't see them. Senator Kennedy.
Mr. Rice, you think we ought to raise the deposit limit to 20 million, right?
And that's for payroll accounts, sir. Yes.
And Mr. Harrison, you agree with that?
I think that'd be helpful, yes, Senator.
Mr. Kelly, how about you?
The recommendations we put forth, Senator Kennedy.
Just give me a number if you would.
I don't have a number. Our recommendation is it needs to be studied and empirically based.
Okay. Mr. Podsiadly?
Yes. Yeah, thank you, sir.
My colleagues are impressed that I can pronounce it.
I'm very well done.
I'm kind of impressed myself.
I used to get a lot of starts with a P going in my undergraduate and high school.
All right. I'll call you Scooter. How,
I'll take that as
give me a number.
I would agree with Mr. Kelly that it needs to be empirically based and that.
Come on, guys. I know it ought to be empirically based.
Okay, well,
Give me
I'll
a
say
number.
this. The one concern
You
that I
used
do
to work
have.
at FDIC. Give me a number.
Yeah, well, the one concern I have is some institution loading up on a significant number of $20 million deposits that then ultimately.
So if you don't like 20, give me a number.
I don't have one off the
You're
top.
not going to give me a number.
I will give you my best guess, which is that 250 is not high enough, and 20 million is probably too high.
How much?
I said 20 million is probably too high.
Okay. Let's
Because
suppose
I worry about.
Let's suppose we go to 20 million.
Yeah.
Banks are going to pay this through assessments, right?
Yes, correct. Risk-based.
Okay. Mr. Kelly, who's going to push back among the banking community?
Senator Kennedy, I'm not sure who will push back on that.
All right, Mr. Harrison?
I think there's some smaller banks that will feel they don't need it. Their deposit accounts aren't that large, and they would be, not as willing to do that. I think some of the banks that currently have coverage for free will likely push back. Or
Some of
implicit.
the what?
Some of the
Larger
banks
banks?
that have implicit coverage
the larger
for
banks?
free. Generally, the larger.
Some of the larger banks?
That is correct.
So you think the larger banks will oppose it?
I don't think they'll support it. I don't know if they will oppose it.
How about you, Scooter?
I love the new nickname. I will take that as a warm regard. But
It is.
no, I would say that my bigger concern is the aggregation of deposits.
Who's going to push back?
I don't know that you would have any institution that would push back other than as
Everybody be happy.
well. It depends on what the cost is, right?
Mr. Rice, who's going to push back?
Not our 144 million members, sir. They'd be delighted that their paychecks are guaranteed.
Who's going to push back, though?
The bankers, sir, the large banks.
The large bank.
They're not here today, and I think their silence is implicit on their stand on this.
Okay. So here's what I hear you saying. 20 million indexed to inflation, but the large banks are not going to like it because they have an implicit guarantee. Does anybody disagree with that? Does anybody disagree? I certainly don't with Senator Warren's assessment that the big banks don't have to worry about it because they're going to be bailed out. Somebody disagree with that? Okay.
Well, let me add a little color, Senator. I think perspective. So I led a committee. And
I'm sorry, sir?
I led a committee that included banks of all sizes.
Right.
And one of the things I learned in leading that committee is that there is a lot of complexity associated with the prudential regulatory aspect of those larger institutions. Their liquidity requirements are very different than mine at $700 million a year. And so it's something that I had to become sensitive to as a leader of that group. And so while we sit here.
Kelly, let me stop you. I understand. You're a smart man and you're a successful man.
Well, I appreciate the compliment.
And I
Senator.
appreciate that. But you're telling me here today, all of you, we've got a problem. And
Correct.
we're not going to, this isn't directed toward you, sir, but we're not going to solve this problem by pondering our navels. We're going to have to come up with a number and index it to inflation. Taxpayers won't pay, the banks will pay. And then find out who's going to push back and why. I mean, that's the challenge. I understand the difficulty and the nuances and the trade-offs. I get all that.
Thank you.
And you make, I don't mean to denigrate your analysis, because you know a lot more about this than I do. But you're saying we have a problem. I'm asking how we solve it. And what I'm hearing is $20 million, index it to inflation. The larger bank's going to raise fresh hell.
Fresh. Senator Cortez Masto.
Thank you. Thank you, Mr. Chairman. And let me follow up on Senator Kennedy's line of questioning. Mr. Kelly, and I think both you and Mr. Patziadli talked about this, the need to be studied, and you talked about empirically based. What do you mean by that?
Senator Cortez Masto, I would say to you that we want to be, if you look at the history of how we've made these decisions, they've always been in crisis. 2008 was a crisis, the permanency in 2010. You go back 28 years before that, we made a decision in 1980 to raise it to $100,000 in the midst of a crisis. And what we believe is there is enough data there with the approval of the FDIC to look at its original intent to provide safety and confidence in the financial system that can cover where individuals don't have to make the decision whether I want to bank at Kennedy Bank or the largest bank, creating that sense of safety. What Senator Warren mentioned a moment ago is implicit that there was not that level of confidence in the system after 2023. And what we're suggesting is there's the data there that we should be able to run, come up with a reasonable solution, and make that going forward index to inflation.
Mr. Patziadli? Say
yes.
that again, because I'm not going to call you Scooter. Patziadli?
Patziadli, yes.
you.
Thank you very much. No, I would offer a little bit of a countervailing perspective, which is I come from a regional banking background. I've been at 2 large regional banks, and I will say during our experience while in 2023, we had the unique opportunity, which was we did see the deposit runs starting to come out of the bank, but we put together a Tiger team and we spent every single day, every day at 5 o'clock, it was everybody from commercial bankers to consumer bankers to legal risk getting together and saying, how are we winning the deposit battle? How are we stopping these outflows from happening? And we were able to do that at the bank at that time. So there is the ability to stop these outflows from a too big to fail perspective. It takes a lot of work. I will tell you, we worked our tails off to make sure that that didn't happen. And the bank ultimately was able to keep, we were one of the few banks, regional banks while I was there at my prior employer, to grow deposits during the outflow market. So it takes work, but yes, it can be done.
So let me ask Mr. Rice and Mr. Harrison, do you see a distinction amongst, if we're just talking about the type of account, which is a payroll non-interest-bearing commercial account, do you see a distinction there that some should have different levels of coverage or not?
Peter, if you don't mind, I'd go first. We do. And we're longtime members of the ABA. We're fully supportive of the work they're doing. We think the analysis is there. We think the facts are there. It's not a crisis today. It was a crisis 2.5 years ago, and I think now is the time in a period of calm to really look at what was the specific problem. The problem was uninsured operating accounts, and the solution is what we're proposing.
Okay.
Or what, sorry, Senator Hagerty and Senator Alsop.
Right, that you believe there's enough data already?
We feel, and the
for that.
FDIC came out in the 2023 study and did on that and said, you know, if we looked at operating accounts, that would be a potential targeted solution. That was in their analysis.
Okay, Mr. Rice?
Senator, on a broader level, I'd like to boil things down to what's talked about on the street. We wouldn't allow Americans to underinsure their homes or their motor cars. Why do we allow that asset class to go uninsured? So that's the first point I'd like to make. Secondly, I think my testimony demonstrates the risk to everyday Americans when payroll companies fail, because the amounts in those payroll companies tend to be way larger than $250,000.
Yeah, thank you. The other thing, and I think, Mr. Rice, you talked about this, you talked about the impact to the employees and
Yes.
to these small businesses. But you also, in your, I believe it's in your written testimony, you talked a little bit about national security issues.
Absolutely.
Will you address that a little bit and why
Absolutely.
this is so such an important for us to take into consideration?
Absolutely. For many years, our government has sought through various programs, including SBIR, to make sure our national security resilience remains strong by spreading contracts out to small businesses. One example I gave is in everyone's living room right now, it's Roomba. The Roomba was originally designed and supported by SBIR for bomb disposal in Afghanistan and Iraq. So it saved lives and now it cleans living rooms. But that's the power of not just a national defense issue that can be turned into everyday benefit for Americans. So these companies are really vital to our economy and to our defense. I think I also highlighted Lockheed Martin. Gives out $6.6 billion in contracts to small companies, and the Orion project, which is our deep space program, has about 1,500 small businesses in support of that program, and almost every senator's district is represented in that program.
Thank you, Mr. Chairman.
Thank you, ma'am. Senator Hagerty, you were next.
Thank you, Mr. Chairman. In March of 2023, we saw 3 of the 4 largest bank failures in history take place. And when panic struck, business depositors began to flee mid-sized banks and community banks. I had these depositors calling me on the phone. What do we do? I hear about the hard work that you're talking, Scooter. There was a lot of work that went in place. You ask yourselves why? Why is that? And I think Mr. Harrison got it. The biggest banks enjoy an implicit government backstop that the smaller banks simply don't have. This uneven playing field siphons deposits away from the local and regional banks. These are the banks that fuel the small businesses and local businesses in our economy. It's critical in Tennessee. It's critical across the entirety of the United States. Legislative action, I believe, is essential. Nobody wants to see the American banking system devolve into a system like Canada's, where only a handful of megabanks control over 90% of the assets. We need a system that preserves a central role for community and mid-sized banks that underlies the financial system of the future here in America. So, Scooter, I am going to come to you, but I have a very quick question for you, Mr. Harrison, because I want to get at the urgency of this. Why is it vital to address this issue now rather than wait till the next crisis?
Senator, thank you for the question. Thank you for your leadership on this topic. It's essential now because we're not in a crisis, because we don't have to respond to something that is knocking on our door. We never seem to predict when the next one's coming, so if we don't do it now, we really are uncovered because we don't have any emergency authority, the FDIC, and our businesses on Main Street don't have coverage for their operating accounts.
Thank you. I share your concerns, of course, and that's why with my colleague, Senator Alsobrooks, I proposed a solution, and that's a targeted expansion of deposit insurance for these non-interest-bearing transaction accounts that we're talking about. These are accounts that businesses use to cover payroll, cover rent, pay their suppliers, and basically handle a variety of other day-to-day expenses. These are precisely the funds that fled in 2023, and protecting them strengthens the confidence in the community and the mid-sized banks. That, in turn, will strengthen Main Street, and it'll strengthen our economy overall. I originally filed this proposal as an amendment to the NDA alongside Senator Alsobrooks, and we're going to file soon a standalone legislation in an updated fashion to get at this. So, Mr. Pontiatley, Scooter, I'm coming back to you now, because I think you can help us get at this. There seems to be a concern that in doing this expansion, somehow we're going to raise the assessments on the very banks that we're trying to help. I want to help get at this. So I've got a few questions to ask you.
Absolutely.
First, does merely shifting the existing deposits from the uninsured column to the insured column cause an ipso facto increase in the bank's total liabilities?
No, not
course not.
necessarily. It's risk-based, and so it would depend on a number of factors based on the current assessment formula.
I think the answer of no is sufficient on that one. Insurance coverage expansion doesn't mechanically raise premiums for banks. To be clear, increased assessments are statutorily triggered when the deposit insurance fund's reserve ratio drops below its mandated minimum. So my next question, is the DIF currently overfunded beyond its statutory minimum?
I think that is a question of characterization. I don't know that it is overfunded or underfunded, but I would say this, that the DIF, if you add new on these types of deposits that are now insured, yes, that could raise a question to the DIF from a characterization.
To be clear for my colleagues, the DIF is currently overfunded, just to be clear with that. The reserve ratio is adequate. It's exceeded its required mandatory level, and it's actually trending upward. And this is why, in addition to a 10-year transition plan that we've got for this, it's precisely why my proposal is able to expand coverage without imposing any new assessments on the system. So I'd just like to close with this, my colleagues, to understand that this targeted deposit coverage expansion is going to do something to shore up confidence in mid-sized banks and community banks, and it's going to protect Main Street businesses. A stronger, more diversified banking system benefits every American, and I look forward to introducing standalone legislation, again, alongside Senator Alsobrooks, in this particular issue, and I think it's going to serve America well, it's going to serve our banking community well, and I urge my colleagues to support this. Thank you.
Thank you, Senator. Senator Warner.
Thank you, Mr. Chairman. I want to follow up on Senator Hagerty and Senator Alsobrooks. I think I agree this is something we need to do, and I appreciate, Senator Hagerty, your good work here. You know, I love to have the discussion about if we do add more contingency. You know, Mr. Potsley, am I screwing up your name? Or so we just call you Potsyadsley. You know, I do think the DIP right now is overfunded, but I think we got to get into the nitty gritty on this. But I agree with looking forward to working with Senator Hagerty and also Brooks on this. I want to, one of the things I've been frustrated with, we're years after Silicon Valley Bank, and I always felt before we start rechanging the regulatory structure, we ought to make sure that we're using the tools we've got. And one is the discount window. And so I've been working for a long time on trying to remove the stigma, and I find it not a great reason that you've got, when the Fed was initially set up, the discount window was that liquidity tool, and just the idea that, well, it's going to be a stigma is somehow that means we shouldn't use it. I've got legislation that would have this better utilization, demonstrate that banks can use it on a ready basis. Silicon Valley didn't even have even anything set up to do that. So we only use the deposit insurance as a last resort. One of the things my bill calls for is to look at pre-pledged collateral. And would you agree that that tool is something that should be counted as banks look forward? And how do you?
Well, thank you, Senator, for the question. And I would say this, that, liquidity is the ultimate arbiter of a bank run, right? Like, liquidity kills. Right. Like, you can have as much capital as you want, but if you're not liquid, you're going to have a run and you're going to have an issue. So anything that establishes or creates a more liquid opportunity for banks to get funding is helpful. And I would support that.
And one of the things there was a lot of buzz after Silicon Valley about how we grapple with the ability to have accelerated runs driven by technology. And candidly, I think some of the folks who spooked the market bore some responsibility. None of that went anywhere in terms of, no matter what kind of capital you have, if you've got 1 out of every 4 deposit dollars leaving the bank in 6 hours, as was the case with Silicon Valley, I'm not sure how we get at that. I want to go to, and I would welcome ideas. Mr. Harrison, Mr. Rice, one of the tools that I've also a big advocate for is reciprocal deposits. We've seen a big upsurge in that. How do the reciprocal deposits ability fit into this discussion about the insurance component? And I've got a question for Mr. Kelly afterwards. So I want to hear Mr. Harrison and Mr. Rice on this.
Yes, Senator, thank you for the question. The reciprocal deposits have a role, but candidly, it is a workaround. And it's a workaround that is private-based, based on somewhat dated technology. And candidly, it went up quite a bit after Silicon Valley, and there's some systemic risks that could be seen in that. Going back to your discount window question, the regulators and the banks have been working very closely on that to smooth the operation of that. So it's an operational issue as well as the stigma. And I think that stigma is going to go away over time.
Mr. Rice.
Reciprocals are great, sir. Reciprocals were $67 billion before the crisis and rose to $173 billion in banks. So there's a capacity issue. So it's a nice little tool. But I also want to point out that First Republic survived the first wave of bank runs. Banks put in another $30 billion, but it was the reports that said they lost more deposits than initially reported caused the second run, which the bank could not have failed. So your point, sir, is right. You do need to stop fear in its tracks when it enters into our system.
And again, the excuse that we don't want to use the tool because of stigma, we just have to grapple with that. Mr. Kelly, I've been a huge advocate for CDFIs, as we've visited in the past. One of the things that we've started, and again, with great help from Senator Crapo, Economic Opportunity Coalition, where we're trying to get long-term deposits into CDFIs and MDIs. How do we do more of that? Because we obviously, and President Trump ought to get credit for this, he's now kind of undermining CDFIs, but he was the godfather in terms of the last COVID bill. We got $12 billion in Tier 1 capital. How do we make sure we keep these Economic Opportunity Coalition ideas alive?
Senator Warren, thank you for your leadership. You do recall that you were part of that leadership that helped ESIP happen during Trump 1.0, and it has certainly been impactful to the CDFI space, so thank you for your leadership in that. Use reciprocal deposits as an opportunity to create that level of security with those large depositors for our banks. And so it has been a critical component. I don't think it is the answer in totality, but it certainly is a complementary component of this. And so I'd just like to tell you thank you again for your leadership on this topic. I think this is what what we propose is what you're describing.
Can I just, I know our time's up, but I just would urge my colleagues, many of you are part of the CDFI coalition. Secretary Bessent has been very supportive of as well. We've got about $600 million that hasn't been released. The Secretary wants it, but we really could use some help getting those dollars released before the end of the fiscal year. Thank you, Mr. Chairman.
Yes, sir.
Thank you, Mr. Chairman. I want to welcome all of you today. Thank you for taking time with us. Mr. Kelly, a special thanks to you being here as a native of Alabama, Eufaula, Alabama, just right down the road from my hometown of Enterprise. And I think you'll understand this, Senator Kennedy. He is a true bipartisan witness. He graduated from Auburn University with his undergrad and then graduated from the University of Alabama with his MBA. So we are certainly proud to have you here today.
Thank you, Senator Britt.
Look, I think so much of today's discussion is clearly in light of the deposit flight we saw after the March 2023 bank failures that occurred. I think it's important for us to take this in context. That was clearly a mismanagement issue. That was clearly where we had unchecked banking executives and supervisors who truly failed to do their job. It is not a testament to the resiliency that we saw within the banking community. I mean, in Alabama, we saw continued strength even through the face of that. And so I think it's important to lay a foundation of that before we have this discussion. I do want to get your thoughts on a couple of things. So often we see this committee and then this body and Congress as a whole create regulations that to me become outdated very quickly. I've heard each of you speak to that, and it seems that you all feel the same, particularly when it comes to potentially indexing these things or making sure that there is fluidity so that they're not outdated by the time they even get in. I'd like for some of you, I mean, I know that's one of the things I've looked at with the SEC small entity definition. I think it's virtually meaningless, and I have a piece of legislation that would work to move through that. But I think we've seen this a lot when it comes to the Dodd-Frank Act, amongst a number of other things. So if we're taking a look at this, I think it's important that we consider indexing or other thresholds that will make this more meaningful long-term. I'd like for each of you to talk briefly about what you think that needs to be. And again, we only have a certain amount of time, so if we could quickly, we'll start with you, Mr. Rice, and just work our way down.
Thank you, Senator. Index it to inflation, FDIC 250, that would be $350,000 today. Any recommendations from this committee, we should also do the same.
Okay.
I agree completely that, when we look at thresholds that get outdated quickly, as I mentioned earlier, Dodd-Frank, was obviously changed by Congress in 2018 to, from 50 billion to 250. Now we're 7 years removed from that. Like, is 250 the new number, right?
Right.
Does it need to be changed?
Right.
And so indexing that, I think, is a good way of getting at that issue.
Okay.
I agree. Indexing, Senator, is really important. The other thing is the world changes, and sometimes these limits have to change with them.
Okay.
I agree, Senator.
Okay. So question for you all. I've heard us talk obviously a lot about business accounts, and I think we all understand the importance of that and payroll, et cetera. My question, I'd like to follow up, since we've gotten some answers on that, about personal accounts. Do you feel like that actually needs to be increased as well? Mr. Rice, we'll start with you.
I do, even based, Senator, on your indexing idea, that would be $350,000 today.
Okay.
I think that you need to look at it from an individual level, because there's a lot of different ways that you can increase that deposit insurance cap. It's not just 250. So say you're married, you get 500, right? Because you get two.
But do you not think it puts smaller banks at a disadvantage, where you have larger banks kind of sort of too big to fail, that people are even moving some of their personal accounts over there?
It would absolutely depend on what the dollar value of those individuals' accounts are, right?
Because what I'm concerned about is when I see these incredible community banks across Alabama and the resiliency that they've shown in the face of sometimes the unthinkable. Those are pillars of community that ultimately allow our small businesses and their main streets and families who are trying to achieve their American dream to thrive. And in many cases, what we don't want to do is see what we're doing here in this committee and Congress drive them to a larger entity, when I feel like it's so essential for them to stay a part of the community that I think serves them so well.
I absolutely agree. I think that, Main Street banks are, the linchpin of our,
100%.
consumer economy. I just think that, there are ways, to be honest, that you can structure those accounts so that you can make sure that you maximize.
Well, I'd love to talk to you about that more. I'm running out of time. I apologize.
I apologize.
Go ahead.
Senator, so for me personally, I don't speak on behalf of the organization. We haven't had this question on the personal side. I support it. Indexing for sure.
And then Mr. Kelly.
Yes.
Okay, and Mr. Kelly, since you obviously understand have in front of us if we are to increase this, either on the business or the personal side. What I've heard from some is kind of a concern about assessments and the shifting there and kind of what that means long term. Can you speak about the positive and the negative of what this would bring?
Yeah, I think being very deliberate, if this body approves the recommendations we've put forward, put some energy behind moving very swiftly on it. This is not a 2-year study. We found even in the 2008 timeframe when the decision was made, they've been talking about deposit insurance for years prior to that. We need action now on this and need your leverage, your leadership to help make this happen sooner than later.
Yes, sir, and War Eagle and Roll Tide.
Same here.
I'm not sure what she just said, but Senator
Thank you, Mr. Chair. Thank you to all of our witnesses today. I want to start by following up on the questions of my colleague from Alabama, because Minnesota is also home to, I think, more than 300 community banks. We're really blessed that we have such a diverse financial ecosystem in Minnesota. And when, Silicon Valley Bank and Signature Bank, when all of that crash happened a few years ago, I mean, of course, there was a lot of anxiety amongst all of the financial institutions about kind of what this fear factor was going to mean for them. But at the end of the day, I think I pretty much have this right. Because those small banks were so rooted in their communities and were so trusted by their customers, everything just sort of settled down, I guess is the way I would describe it. So I want to follow up on this question. How can we, I'm convinced that we need to raise the deposit insurance cap. The idea of indexing it makes total sense to me. But my question, I guess, maybe to Mr. Kelly and to start with is, how can we make sure that we're also reflecting the needs of these smaller banks and that we are not imposing unnecessary costs on them or just making it more difficult for them as we also want to have sort of the benefit of a higher cap?
Thank you, Senator Smith, for the question. I would tell you, it really, the foundation of this is our leadership locally. To your point, we had moved into your market in 2022, and this happened in 2023, and we got just a couple of calls about our stability as an institution there in the Twin Cities. But through our relationship, that water did calm down. We went to events like chamber events and other nonprofits, and that question was continuously open: is my money safe? And I think we have to be the leaders to help set the tone that we are looking after this not only in crisis, but in moments of calm. And so I thank you for your question on this. Again, and thank my colleagues because they've done a great job in looking at the research as it relates to their banking. Bob just mentioned these numbers. I think the intent is we need action now on this topic.
And we can do this without imposing additional burdens or costs on these small community banks that are, honestly quite stable.
Well, we've talked about the data. We need to look at both sides of that. So I can't commit to what it will cost, but I think we can approach this in a reasonable manner and such that we do provide that stability and confidence, as was the mission of the FDIC.
Mr. Harrison, there's been conversation today about how, this is my view of it, that in a lot of ways our financial, this is my words, not yours, that our financial system is sort of rigged to help the big banks, the biggest banks, I mean to say, the GSIBs. And sometimes we might be putting mid-sized banks, not to mention small banks, at a competitive disadvantage because of that implicit guarantee that the big banks, the biggest banks, have. So I'm concerned that the $250 billion threshold that is in the Hagerty and also Brooks legislation, I'm wondering whether that's the right threshold, whether that doesn't create some sort of perverse disincentive for mid-sized banks that fill a very particular and important niche at least in Minnesota's financial ecosystem. Could you speak to that?
Thank you for the question, Senator. The mid-sized banks, really, what we're looking for is a level playing field, and I don't think we have that. And that goes to the meat of your question. So what is the right number on the upper end? I think many of the larger banks, talking to my peers, larger peers, they also saw deposits leave. The concern is if we do nothing, the deposits will continue to drift towards the largest banks. And not having some type of coverage, and the sooner the better, would continue that trend.
And well, I would agree with you on that. I think that that's something that we should that we should really look at, and that kind of deposit migration is completely unrelated to the underlying stability of the bank and the management of the bank. It has to do with this sort of perceived additional safety that can be achieved by being at banks that are going to get bailed out because they're systemically significant.
And I know we talked about a former employer that didn't lose deposits, but many of the larger banks did, and they still went to the GSIBs.
Thank you very much. I yield back, Mr. Chair.
Thank you, ma'am. Senator Ricketts.
Thank you, Mr. Chairman, for holding this hearing today. I appreciate it, and to the ranking member as well. And thank you for our witnesses for being here today. As been mentioned, when Silicon Valley Bank and Signature Bank collapsed in 2023, it wasn't just their customers that were affected. We saw commercial deposits flow out of small and mid-sized banks all across the country and into a few of the larger banks, as you were just describing, Mr. Harrison. This wasn't because those financial institutions were suddenly weaker. In fact, many of them were very well capitalized and stable. It was because businesses with balances above the FDIC's $250,000 limit realized their funds might be at risk if they stayed at a smaller institution and shifted their money to one of the bigger banks overnight. That left our small and mid-sized banks, community banks, regional banks, and credit unions at a disadvantage, scrambling to retain funds and making it harder for them to keep serving their local communities. And similar to my colleague from Minnesota, Nebraska community banks are the lifeline of our communities. We don't really have any of the big banks. Our largest bank would be First National Bank of Omaha. And these are the ones that finance our farms, our businesses, and really provide for our families' livelihoods. So they support job creation, provide capital, small business growth, and keep our local economies thriving. Mr. Harrison and Mr. Kelly, you both represent financial institutions of sizes, and I think you answered a yes or no question about after deposits flee. Can you talk a little bit about what degree did you see commercial depositors moving funds away from your institutions?
Senator, we did not see movement. We had a pending deposit that was about to happen when that happened, and it was put on hold.
Okay.
So if I recall correctly, I think several of my colleagues have said pretty much the same thing, where they had to fight for deposits, but I'm not sure that these individuals at this table, unless I missed something earlier, saw flight from their respective banks.
And so did you see then that this didn't happen, and so there really, even after things died down, business kind of went back to normal? Is that accurate?
I would say business came back to normal for us and in the midst of the crisis. But the reality is we know that there was flight that took place based on our conversations with colleagues. And what we're trying to do, and what the clarion call from this panel, I would tell you, is we need action now before a crisis happens again.
Mm-hmm. And Mr. Rice, would you say that was accurate for your credit union as well?
Credit unions, because of the reputation and ownership structure, sir, did not. Credit unions actually grew 2% during that period because of the stability of a credit union. But again, contagion and fear are dangerous. So when the next wave hits, it could take anybody out.
Mm-hmm. And so, Mr. Kelly, you said some of your colleagues saw some of that fear or some of the deposit, even if you didn't experience it yourself. Did some of the other institutions that you know about, did they see those deposits start coming back after things kind of settled down?
I don't know the exact answer to that, Senator. Just don't know the answer to that. But that was from some of my colleagues in the Mid-Sized Bank Coalition. Bob may be better to address that issue than I.
Sure.
Maybe, Senator, to touch on that. Us personally, we lost several tens of millions of dollars, but not significant relative to our size, and it did go to the GSIBs. But some of my peers, they lost up to 10% of their deposits within a week, and a very significant amount of deposits. Some of that came back, but not all of it.
So some of it did come back, but not all of it?
Not all of it.
Again, getting back to just the perceived risk from...
That's correct.
Yeah.
Once it moves, it's much harder to get it back.
Yeah, very good. Mr. Adley, sorry. In your view, what risks, as opposed to long-term competition and credit availability in local economies, by having the risk out there that these deposits could flee?
Well, great question. And, to follow up on the colleagues on the panel here, obviously our experience was a little bit different when I was at my prior employer at the bank. We put shoe leather down and really, ground it out and made sure that we kept those deposits so that they didn't leave. That said, from a, systemic risk perspective, that, obviously my former hat as a regulator concerns me a little bit, that you could increase the concentrations at, smaller depositories. Say they load up, 20 million here, 20 million there, 20 million there, and all of a sudden they're at, $500-600 million in, now insured deposits. Is that going to create systemic risk to the platform as a whole, right? And is that going to be cost-based into the system? That is something that, from my former regulator hat, worries me a little bit.
Yeah, I'd have to disagree with that, I'm sorry, because I think that by balancing, leveling the playing field, we're spreading out the risk. What we're doing now is we're concentrating it in a handful of institutions.
Can I just have one more quick question? Mr. Chairman? No, I guess that would be no. I will submit a question for the record. How's that? How's that, Mr. Chairman?
Well, actually, it's her time. We're eating. I know that we all have more committees.
No, that's quite all right.
You want to give him 10 seconds to
Sure.
ask a question?
I was going to say, just,
and not get an
Mr. Yardley, is there just any other reforms you can think of that would be, that are not in the bill that we ought to be considering?
Yes, and I'll take 20 seconds, and I don't mean to take Senator Alsabrook's time, but I would say the biggest thing that should be discussed is whether or not the systemic risk exception should be applied the way it was, because that created this notion that every deposit was now insured, right? Is that good policy? I don't know. I will offer that I think that it is counterintuitive to the least cost deposit insurance test that Congress has created, and that should be something that's debated longer term.
Can I add in, if you don't mind?
Also Brooks. Oh, yeah.
Resolution and emergency powers, those two topics we had in our recommendations.
All right, thank you all very much. We're going on Senator Alsobrooks.
Thank you.
Thank you so much, Chairman Scott. Also want to thank Ranking Member Warren for holding this important hearing, and for our witnesses, thank you so much as well for joining us today. I'd also like to thank my friend Senator Hagerty for his partnership and for his leadership. I note, Mr. Chair, that my timer is not working here. So I will be quick. I'll just take 15 or 20 minutes to ask these questions, and then I'll be out of your way. Now,
Well, Senator, I am happy to give you a 30-second warning.
Okay, thank you.
Right around 5 minutes, since it took
Thank you.
so long.
Will do. After the Silicon Valley bank collapse, individuals and small businesses questioned the security of their deposits. Many believed that their deposits were only truly protected if they were housed at a large bank that had the implicit backing of the federal government. Now Congress, I believe, has an opportunity to provide greater certainty to small banks, credit unions, small businesses, and the workers they employ. Senator Hagerty and I have drafted bipartisan legislation to provide this certainty. Our legislation would expand deposit insurance to cover the business checking accounts held primarily by small businesses at small banks. These bank accounts are used to pay employees and maintain daily business operations, but are often uninsured, leaving them vulnerable if there's another Silicon Valley bank-style financial crisis. Our proposal will give businesses certainty that up to $20 million in payroll accounts held at neighborhood banks and credit unions will be insured by the full faith and credit of the federal government in the event of a crisis. This will help the Maryland small businesses that make up about 99% of my state's business community and employ more than 1 million people. I'm grateful for the support of the National Association of Women Business Owners, which praised our legislation and said that women business owners must be able to trust that regardless of their banking institution, they can make payroll. I'm also grateful for the support of the Maryland DC Credit Union Association, which represents over 65 credit unions in Maryland and their more than 1.9 million members. Their CEO said that our legislation would deliver critical peace of mind by safeguarding the funds meant to support jobs, pay salaries, and meet key expenses, which will strengthen trust in the financial system. So today, I'd like to just begin, Mr. Harrison, I have a question for you, and I want to thank all of you again for being here, and I want to thank you, Mr. Harrison, for your support. You spoke passionately about the importance of raising the deposit insurance level to cover small and medium-sized businesses in the event of a crisis, and I couldn't agree more. I'm proud of this proposal that myself and Senator Hagerty, like Chairman Scott and Ranking Member Warren, want to make sure that we want to make sure we get this right. So can you talk specifically about how our proposal would help the clients you serve? Are there areas also that you believe our proposal could be improved?
Thank you, Senator, and thank you for your leadership on this issue. Really, it is a topic that is near and dear to us. It really supports the small businesses. I said in my opening comments, so much of the deposits that we get go back into the community, and that support of the community, and really knowing that local hospital, that small business, being able to support them makes all the difference. It will just give more certainty in times of stress. When times are good, you don't need this type of thing. Nobody talks about deposit insurance. Very few people ever look at deposit insurance when they choose a bank. They just assume their money is safe. And that's what the whole regulatory environment's for, and that's what we serve our communities by making sure the dollars we receive go back into those communities. Is looking at things to change, potential change in legislation. I know there's talk about what the actual limit should be, how large an organization it should cover. Those are worth looking into. We haven't had a chance to really study it, but I do know that the proposal that you and Senator Hagerty have made will cover the vast majority of operating accounts that businesses need to rely on to make payroll, protect their working capital, pay their vendors, and it will achieve that, and that's a huge goal that would be beneficial.
Okay, just one more quick question. My time is tolling. An important question in any deposit insurance reform proposal is who pays for it and how. And so Senator Hagerty and I share the goal of preventing small banks from being disproportionately targeted. So, Mr. Harrison, would you, based on the current deposit insurance fund projections, do you think that our pricing approach and the 10-year phase-in would mitigate the need for an increase in assessment rates?
I do.
30 seconds.
I think the phase-in would do a lot, and then over that 10-year period, depending on what happens in the greater market, that would be more than enough to maintain the DIF at its current level,
Thank you so much,
which is fully
Mr.
funded.
All right, on time, under time. Thanks so much, Mr. Chair.
I have 15 seconds still.
I'll yield the rest of the time.
Okay.
Thank you.
Senator Warnock.
Thank you, Chair Scott. During the spring 2023 banking crisis, many small businesses struggled simply to pay their employees and to cover expenses only because those businesses chose the wrong bank to keep their money safe. Small businesses, in my view, should not be punished for the mistakes of failed bank executives. And that's why I'm glad this committee is looking at ways to reform deposit insurance. However, we should be careful not to place additional strains on our community banks, many of which serve populations and communities that giant Wall Street banks don't. Mr. Kelly, community banks in Georgia and across the country compete with big banks by knowing and investing in the communities they serve. Are you concerned about deposit flight to big banks where small businesses rush to put their money in the biggest Wall Street banks because they're nervous about keeping their money safe?
Yes, Senator Warnock, thank you for the question. I would tell you, whatever it is called, if you look at what took place in 2023, there was inherent flight that was moving because of nervousness and anxiety within the business community. And so the efforts that we're talking about today hopefully will bolster confidence and allow small businesses to feel more confident in putting their monies in the small businesses in the small towns in the state of Georgia.
In fact, we have seen over the last 2 decades about a 50% drop in the number of community banks. And at the same time, Wall Street banks have continued to make more and more and more money, getting bigger and bigger. How should we ensure that small community banks, and let me be clear, I think there's a role in the larger ecosystem for the big banks and the small community banks. But clearly, all the movement has been going in one direction. So how should we ensure that small community banks do not foot the bill for deposit insurance reform legislation?
I think it has to be carefully considered. We also have to ensure that there's adequate regulation, Senator Warnock, on this topic. Regulation can run and cause our businesses to be challenged economically. And you see, really, in looking at what's happening in the consolidation, a lot of that is economics. One issue I will bring up that's probably not part of this topic is when you look at things that look like a bank, act like a bank, and can buy a bank, it should be taxed like a bank. And my point is, we have a lot of inequities across the system that we need to deal with. Taxation is one of those that will allow these small institutions to stay in small towns like Griffin, Georgia, or Hayhira, Georgia. That's important to be sure that they become the lifeblood for economic prosperity in these small towns.
So this issue is further complicated by technology and other
Absolutely.
disruptors, correctly?
Absolutely.
Correct.
I think partnerships, et cetera, a need to help overcome those technological
So
challenges.
we could see reform, if we're not careful in Congress, that creates further consolidation.
That is a concern. I think there could be unintended consequences. That's why our proposal, the 10 recommendations, we thought was a little bit more comprehensive. If you take a rifle shot approach at this, we are concerned about unintended consequences.
Thank you, Mr. Kelly. Mr. Harrison, how will a proposal to increase deposit insurance limits for business accounts help smaller community banks compete with big Wall Street banks?
It really levels the playing field, Senator. Thank you for the question. And that's all we're asking for, is being able to compete on a level playing field. When we saw some of those deposits leave after Silicon Valley, not only did they not come back, but then that introduced the larger banks into our customer base. And so you're fighting just to hold on to the customers you had and have serviced for many, many years. So by the higher deposit limit, knowing their operating account is safe, that you'd be able to protect that and prevent that from happening next time.
Thank you very much. I think it's so important for us to get this right and to remain focused on getting this done, but getting it done right so that we don't worsen the problem. I'm going to stop now just to say that I beat Angela Albrook's record.
Thank you, Senator Warnock, for doing so. In closing, I'd like to thank the witnesses for being with us today. Some of you traveled across the country to be a participant in this hearing. Really helpful information provided to us today. I think that this committee should act, frankly, on increasing the limits. I think that it's not simply the payroll accounts that need to be taken care of or looked after. I think it's the average everyday American who may have saved all their lives and then put their money in an account and have too little insurance to be comfortable. I think if we think about it from that perspective, Mr. Rice, that you did a really good job. There's no such thing as a small business. As a former small business owner, it was big business for me.
Thank you, sir.
And so it's that sentiment that helps me appreciate that you understand not only what you're talking about, but who we're talking for. And that, for me, is as important as what we're talking about. For senators who wish to submit questions for the record, those questions are due 1 week from today, Wednesday, September the 17th. To our witnesses, you will have 45 days from that day to submit your responses to questions for the record. Thank you very much for educating and informing not only those of us on the Banking Committee, but those who are paying attention to this on C-SPAN. Well done. Well done.
Well, long time no see. I know, how are things? Good? Yeah.
How are you feeling? You doing good? Yeah? See if I am working on the First Amendment of Indiana schedule.
Yeah. Because they're coming up with something.
Yeah. But there's also
I knew that was something that.
Sorry, you have a good flight up? Oh, yeah, it was good. It was great. Good luck to you. You headed home today?
Thank you. Yes, I know. I don't have anything about what day it is.
So, as a fellow engineer, look at guy that wasted all those semesters of physics. It could have been party. You could have had a with the banking graduates. It was worth it. What discipline did you finish? Yeah, electrical?
I'm chemical. My wife is chemical. Both my daughters are chemical. Really? Yeah.
just on fentanyl, for example, my experience with fentanyl, and I visited places like Recovery Village, Lake of the Ozarks, there's multiple places in Kansas City that treat individuals with these kind of disorders. And so what I find is fentanyl specifically, like this body has addressed the crime aspect of it with penalty provisions, which is a good thing. There's a flip side to that. So there's also the users of fentanyl, right? And so usually the age range is around 18, 21 when they decide to get treatment. And I think the one thing that blows my mind, and I've seen this no matter what race you are, is that these individuals have died and been resuscitated at least 5, 6, 7 times. And so, you know, I think about the impact that has on their parents and what the parents have to go through. And I do know that with substance use programs, the first thing is to take the person away from out the environment of the drug, right? And then you have to deal with the withdrawal. And then the process really begins on the underlying things, the mental stuff that they don't have a chance to really learn while you're using all the time. And so as a registered nurse, I'm imagining you be the person say, take these pills, take these pills. So explain to me what you see and how you think this money goes to impact nurses in those programs.
Absolutely. So this money is from settlement, not only from the marijuana fund, but also from the settlement from the Sackler family, spreading the opioid epidemic basically across the country. That's where this money is coming from, right? That to treat these diseases. I actually have Narcan, not on me, but I've administered Narcan. I have seen somebody in front of me not ventilating and called rapid responses. I've administered that Narcan and brought somebody back from a non-life sustaining ventilation. I have seen family and friends standing with these people and the terror in their eyes as their family member, their child, has been there in front of them not ventilating. That's a medical term for breathing, right? This is a disease that is really difficult to treat, but treatment is available if we are willing to invest in it. It is never a good day when I walked into a patient's room or in the hallway or in a bathroom in the facility, which has happened, and witnessing somebody in some kind of medical emergency where they are not ventilating due to, at the time, we don't know what. There was somebody actually in the lobby of the place where I was, this is in the middle of the night, who had a medical emergency, and me and another nurse basically stumbled upon this individual on the floor in some kind of medical emergency, and because I was trained and she was trained, we were able to administer first aid, and that person ended up going back home to be with their families. Now, that is one step of the process, saving somebody's immediate medical emergency. The other step of the process is, what are we going to do about it as Missourians? What are we going to do about it as a body? What are we going to do about veterans who are managing their own kind of mental health illnesses and symptoms? What are we going to do about it? How are we going to invest in them? So it's a real challenge that actually has a solution if we are willing to invest in it.
Thank you, gentlemen. My last comment is, this is not really the most well understood area of law, but we'll get some policy making here. These are some of the most brightest individuals who have these kind of disorders. And if you clean them up, they can contribute to society in very good ways. And so this money right here goes to those programs. I believe this body should support such programs. Supporting these programs is supporting Missourians, and it's putting Missouri first. And with that, Mr. Speaker, I would ask the body to support the gentleman's motion. Thank you.
Further discussion, lady from St. Louis City.
Thank you, Mr. Speaker. To inquire of the gentleman from St. Louis City, Murray District.
Which district, lady?
The 78th.
Does the gentleman from St. Louis City yield to an inquiry from the lady from St. Louis City?
Yes, I do.
Proceed, representatives.
Hey, gentlemen.
Hey, General Lady.
I just wanted to make sure that, you know, the lady from Green had a conversation with a gentleman from St. Louis. I don't know if you're privy to it. Do you receive any messages from anybody in this body of the people who are dealing with their illnesses downtown, specifically in areas more closely to the Live Support Center and what you're talking about right now?
Yes, I have, and actually heard from members, not just in St. Louis City or our region, but all across the state for this issue. I mean, sitting through budget, that was something that that came up a lot all across our state. But if I could, lady, I did have one thing I wanted to acknowledge on that exchange.
Absolutely, gentlemen.
Yeah. The one thing I just wanted to leave the body with in closing is that I know there's a lot of things going on. I know people have a lot of emotions going on about what's happening today in this Capitol, but if everybody could just focus in on my voice, don't look at your phones, don't talk to your neighbors, but look down at this box. Has the pretty green button, that yellow button, that red button, but punching that green button is just our opportunity to say here in this house that this is something that we believe in, this is right, this will save lives, and I'm pretty certain the governors that are not going to retaliate against anybody for voting their conscience or doing what they believe Jesus would do.
And I agree with that gentleman, because I believe Jesus said the last will be first and the first will be last. So I just want to make sure that we take care of our most vulnerable. Thank you for bringing your motion forward, and I will be supporting it. Thank you, Mr. Speaker.
Further discussion. The chair recognizes the budget chairman.
Thank you, Mr. Speaker. Speak on the motion.
Proceed, gentlemen.
Thank you, Mr. Speaker. Just to finish up with my conversation with the gentleman from St. Louis City, in his inquiry, we kind of just ran out a little time there. Just finish what I was saying. The governor's veto letter stated that this is, they understand this to be an ongoing program and need, and this is not an ongoing source of funding. This is the opioid settlement fund, which is finite. It's significant, but finite, and we got to make sure we don't over appropriate it, and that what we're using it for is not necessarily for things ongoing in nature, because eventually this fund is going to run out. So I think those are important considerations, and the governor's not wrong to be thinking about those. I would also just note that the city of St. Louis also got opioid settlement funding, and so if the city of St. Louis and the delegation, if they view it so worthy, then I was happy to try to help the gentleman this session, which I did, which is why we're now talking about this, quite frankly. But I'm happy to visit with him next year and to try to look and see if we can find maybe another way to do this in the future. And also, I would encourage the delegation to go to St. Louis City in the meantime and advocate to the city that they use their opioid settlement funding for this purpose if this is an immediate need and something they need to address right now. And I think they'd probably be more successful in doing that. And so, Mr. Speaker, for that reason, I would ask that the body not support the gentleman's motion. Thank you.
Further discussion. The gentleman from St. Louis City is recognized to close.
I appreciate the comments from the budget chair. If anyone, the funding and how the organization plans to use it isn't going to pigeonhole the state for ongoing need. Is mainly for expansion, for equipment, for services, and the funding model that the organization has, I believe, would support it going into the future without the state's help. But what this will help us do is, with the rise of opioid cases, it will help them expand a bit. And with that, Mr. Speaker, I'd like to renew my motion.
The gentleman from St. Louis City has renewed his motion that Section 8.066 of House Bill 8 be passed, the objections of the governor thereto notwithstanding. All those in favor of approving the gentleman's motion will now vote yes. All those opposed, no. The clerk will ring the bell and open the board. Has everyone voted? The clerk will close the board and tally the vote. With the yeas being 53 and the nays being 93, the gentleman's motion has failed. Does any other member wish to be heard on House Bill 8? Seeing none, the House will now address Conference Committee Substitute, Senate Substitute for Senate Committee Substitute for House Committee Substitute for House Bill 9. Does any member wish to be recognized for a motion? Seeing none, the House will now address Conference Committee Substitute for Senate Substitute for Senate Committee Substitute for House Committee Substitute for House Bill 10. Does any member wish to be recognized for a motion? The chair recognizes the gentleman from Jackson County.
Thank you, Mr. Speaker. I move that Section 10.105 of Conference Committee Substitute for Senate Substitute for Senate Committee Substitute for House Committee Substitute for House Bill 10 for the Independence Fire Department be passed, the objections of the governor thereto notwithstanding.
The gentleman from Jackson County has moved that Section 10.105 of House Bill 10 be passed, the objections of the governor thereto notwithstanding. The gentleman from Jackson is recognized to explain his motion.
Thank you, Mr. Speaker. This would restore funding that we put in the budget for the ARCH program, or that stands for the Alternative Response for Community Health. And it is an interdepartmental collaboration between the Independence Health and Animal Services Department and the Fire Department. And so this is a team of a 911 community response unit that is designed to place community paramedics with licensed clinicians to respond to 911 operations, especially the lower acuity ones, to help take some of the burden off of our police and firefighters and first responders and help shift some of that to calls where they don't need to respond. And you know, I'm grateful that all of the representatives from Independence have been incredibly supportive of this program. Our firefighters, asked us to do something to try to restore this funding because we really need to expand the program before next year when our community will have much bigger crowds in them for the World Cup. And, I'm grateful that Senator Nicola on the other side of the building has also been a champion of this. And actually, the gentleman from Jackson Steinmeier District was on the city council when this was formed. So, Mr. Speaker, may I inquire of the gentleman from Jackson Steinmeier District?
Does the gentleman from Jackson County, Independence, Sugar Creek, yield to an inquiry?
Yes, Mr. Speaker.
The gentleman may proceed.
Good afternoon, gentlemen. Thank you for taking my inquiry. I know I dashed over to try to give you a heads up, but I wanted to ask just kind of some historical knowledge about this. You were on the council with this forum. I know that you were integral in getting it up and running when you were on our city council and were my city council person. Could you kind of just describe some of the history of why this program was founded, why it's important?
Yes, and thank you for the question. I was supportive of this when the fire department came to explain this program. It was a novel program. I don't think anybody has tried this. What it was founded on and what it continues to be is a two-pronged approach, which allowed for a medic and a social worker to begin to go out in our homeless camps and community to triage those individuals and to, if they wanted help, needed help, that they were able to, they had a long list of services that they were able to do. The battalion chief is a medic from the military, knows so much about just care in general, and was able to take this program out of being homeless, being mentally, having mental health issues is not a place where we need badges and guns. We need compassionate care, and the fire department offered that, and they started to make a huge impact in the community. And I think one that is still fairly new. The data's still coming in, but it's on a shoestring budget, as you know, in Independence. And their dream and desire is to be able to run 24/7. Now we can only do 5 days a week from like 8 to 5.
Right.
And we know that the
crisis
care and the
happens
needs,
outside of those times.
Apparently it does, because we need more help. So the data that we're collecting, I think, is still falls under that conceptual plan, but as we've talked, Other cities have seen it,
Yeah.
understand it, and they
Other
see the
states.
need.
Yeah.
And it takes policing back to what they're supposed to do, which is to enforce law.
Right.
And allow the compassionate side of a community to extend into an area that people need.
Absolutely.
So
Absolutely.
it's both public safety and it's also mental health.
Great. I really appreciate you explaining that, and thank you for championing and getting it in the budget this year. Thank you, gentlemen.
Of course, thank you.
Mr. Speaker, just to finish up my time.
Proceed, gentlemen.
Thank you, Mr. Speaker. You know, as you've heard, it has been a bipartisan effort to get this in the budget this year. Our firefighters back home are still anxious to get this funding. I would love to have it this year just to be able to build the program before the time comes when we need it and we're scrambling to get it put together next year. So I ask the body to support my.
Further discussion on the gentleman's motion. The chair recognizes the budget chairman.
Thank you, Mr. Speaker. Speak on the motion.
Proceed, gentlemen.
So, Mr. Speaker, yeah, just real quick on this, and again, I think this is another instance in which this is opioid settlement funds being proposed to be used here. This is a local initiative, and not that we don't support local initiatives at the statewide level, but I think again it's important to note that as it relates to the opioid settlement, it not only was state government that got settlement dollars, every local community across the state got settlement dollars. Across the state of Missouri, and so they also, have some funding available from the opioid settlement to address local needs, and I think this is another area in which that could be appropriate. Appreciate the gentleman working on this, and I know we'll continue to work on it in the future, and at this time though, I just won't be able to support the gentleman's motion. Thank you, Mr. Speaker.
Further discussion on the gentleman's motion. Seeing none, the gentleman from Jackson County is recognized to close.
Thank you, Mr. Speaker. I close.
The gentleman from Jackson County has renewed his motion that Section 10.105 of House Bill 10 be passed, the objections of the governor thereto notwithstanding. All those in favor of approving the gentleman's motion will now vote yes. All those opposed, no. The clerk will ring the bell and open the board. Has everyone voted? The clerk will close the board and tally the vote. With the yeas being 46 and the nays being 97, the gentleman's motion has failed. Does any other member wish to be recognized for a motion on House Bill 10? The chair recognizes the lady from Greene County.
Thank you, Mr. Chair. I make a motion that Section 10.915 of Conference Committee Substitute for Senate Substitute for Senate Committee Substitute for House Committee Substitute for House Bill 10 for a rate increase for home-delivered meals be passed, the objections of the governor thereto notwithstanding.
The lady from Greene County has moved that Section 10.915 of House Bill 10 be passed, the objections of the governor thereto notwithstanding. The lady from Greene is recognized to explain her motion.
Thank you, Mr. Speaker. This is an override of the line item veto of 10.915, which partially decreases the amount we allocated to the Medicaid home delivered meals, often referred to as Meals on Wheels. The rate increased by 1.1 and some change dollars. This includes $303,560 from general revenue, and essentially it cuts the reimbursement rate from what we passed out of $7.14 down to $6.68. Now, Mr. Speaker, I will tell you, when I saw the veto, it hurt, because there were a lot of us in this room that worked really hard on that particular item. And I will say I took on part of that challenge when I was listening in Budget Committee to my committee members who expressed need within their committee. So I spent my spring break working on a solution to help your people in your communities. Yes, this does impact us statewide, but I heard my friends from the other side of the aisle say, my community is hurting. I had the skills to be able to help figure out how to address the problem, and I dug in. And luckily, members from both sides of the aisle worked to make a difference and get this across our chamber. It was a little lower. It was the original, now the $6.68. We continued to work it over in the Senate and got a bump up even more. So when I see the decrease happen, it hurts, because not only does it impact our seniors, but then it was this team effort that really worked hard to get it across the finish line. That's disappointing. But look, I understand. I mean, I know we're going to be in some tough budgetary situations, and the governor did a good job of laying out what we can expect. So I understand it, and I wasn't going to initially offer an override, but then we got this call. And when I heard that the budget chair initiated the call, or was supportive of the call initially, and then the governor called it, I thought, well, we must have a little bit of money to work with. So what better way to use that money, if we have some extra money, than to help feed our seniors in need? It's not a lot of general revenue that's needed. Under $400,000 in general revenue. The ask isn't big. Yesterday to date, I asked for the amount that special session cost. And the number that was given to our staff, as of yesterday, we had spent $105,000 on the extraordinary special session, not where we are right here in veto. $105,000. Because of the work we did, and with MAPS, we had to buy Maptitude. We bought 3 licenses. $21,000 is the number I was given for Maptitude. Mr. Speaker, that money could have been used to feed seniors in need. That money could have been used to feed seniors in need. And ironically, as we were in this chamber, we received a text. We're going to light up the dome in recognition of Hunger Awareness Month. Really? Really? Mr. Speaker, I so value the work that we were able to get done in this body on this initiative. And while it wasn't huge, we started making momentum, and we figured out where we needed to address the problem. And it was enjoyable work to be able to do that with my colleagues across the aisle, because when their community hurts and I can help fix it, I'm going to do that kind of work. But as I said yesterday, when I see something that's not useful, not impactful, it challenges me. Mr. Speaker, I could do a vote on this. I could do a vote on this and put everyone on record for where they stand. But I value the work that we did together to get this through too much to put anyone in jeopardy. because those relationships are valuable to me, Mr. Speaker. I hope you understand that. And because of that, Mr. Speaker, I will withdraw my motion.
The lady from Greene County has withdrawn her motion. Does any other member wish to be recognized for House Bill 10? Seeing none, the House will now address Conference Committee Substitute for Senate Substitute, Senate Committee Substitute for House Committee Substitute for House Bill 11. Does any member wish to be recognized for a motion on House Bill 11? The chair recognizes the gentleman from Jackson County again.
Thank you, Mr. Speaker. I think I'm the last one. I move that section 11.246 of committee conference substitute for Senate committee substitute for House committee substitute for House Bill 11 for Jackson County Community Services League be passed, the objections of the governor thereto notwithstanding.
The gentleman from Jackson County has moved that section 11.246 of House Bill 11 be passed, the objections of the governor thereto notwithstanding. Gentleman from Jackson.
Thank you, Mr. Speaker. This would restore funding that was taken away by the governor for community service leagues, drop-in center in eastern Jackson County. He did leave some money there, so I am grateful for that, but it's not enough to do what the program was hoping to do. Last but some of the funding wasn't able to be used for what their actual needs were, and they need to do some remodeling of the church basement. A church, Good Shepherd Community of Christ, has offered their space to allow that program to be up and off and running, and it is important as we think about public safety and follow the governor's call to look at public safety, that we have a place for people to go during the day who might be experiencing homelessness, and it also helps them by doing that. It gives them a place to find a job, to be connected with employment, and to get back up on their feet. And we find ourselves at a time when people are really struggling to make ends meet. A lot's been talked about how much has been in special session, this or that, but and I would encourage my colleagues who told us last year that we lost elections because we weren't talking about the economy, don't go in that direction. You guys need to keep talking about the economy too, and find real ways to meet people's needs. And with that, I would take any questions.
Discussion on the gentleman's motion. The chair recognizes the budget chairman.
Thank you, Mr. Speaker. Speaking on the motion.
Proceed, gentlemen.
Thank you, Mr. Speaker. I'll be brief here. And again, I know the gentleman's very passionate about this. I appreciate his passion, of course, advocating for his constituents in his area and the work he did in the budget. As he noted, the governor didn't veto the entirety of the amount of this money, and it is general revenue money, which is the most precious resource of funding we have. It's not some sort of dedicated revenue or some federal money that we can use for this purpose. It is general revenue, and there's a great strain on that, and it's growing greater all the time. And so, taking that into consideration, the amount of money that the General Assembly we added to the fiscal year 2026 budget, I think we do again need to be mindful about the future and be cautious, and important context again. And I appreciate the gentleman for mentioning it. The governor didn't veto the entirety of this amount. He just vetoed a portion of the appropriation. And so again, I won't be supporting this motion today. I'd ask the body not support it as well. Thank you, Mr. Speaker.
Further discussion on the gentleman's motion. The gentleman from Jackson is recognized to close.
Thank you, Mr. Speaker. I close.
The gentleman from Jackson County has renewed his motion that section 11.246 of House Bill 11 be passed, the objections of the governor thereto notwithstanding. All those in favor of approving the gentleman's motion will now vote yes. All those opposed, no. The clerk will ring the bell and open the board. Has everyone voted? The clerk will close the board and tally the vote. With the yeas being 47 and the nays being 99, the gentleman's motion has failed. Does any other member wish to seek recognition for House Bill 11? Seeing none, does any member wish to seek recognition for House Bill 12? Seeing none, does any member wish to be recognized for a motion on House Bill 17? Seeing none, the chair recognizes the Majority Leader from Greene County.
Thank you, Mr. Speaker. The next order of business will be House resolutions, and I ask to be recognized for a motion.
The chair recognizes the gentleman from Greene County.
Thank you, Mr. Speaker. I offer House Resolution number 2 and ask that it be read.
The clerk will read the resolution.
House Resolution number 2. Be it resolved by the House of Representatives that the Chief Clerk of the House of Representatives inform the Senate that the House, having been duly convened as provided by Article 3, Section 32 of the Constitution, adopted no motions to override the governor's vetoes on conference committee substitute, Senate committee substitute, House committee substitute, House Bill 2, House Bill 3, House Bill 4, House Bill 5, House Bill 6, House Bill 7, House Bill 8, House Bill 9, House Bill 10, House Bill 11, House Bill 12, and House Bill 17 when the bills were called by the senator or by the speaker.
Gentleman from Greene County.
Thank you, Mr. Speaker. I move the House Resolution number 2 be adopted.
The gentleman from Greene County has moved for the adoption of House Resolution number 2. Discussion on the gentleman's motion. Seeing none, all those in favor of approving the gentleman's motion will signify by saying aye. Aye. All those opposed, no. And the ayes have it. The gentleman's motion is approved. Gentleman from Greene County.
Thank you, Mr. Speaker. The next order of business will be messages from the Senate.
The clerk will read the messages from the Senate.
Mr. Speaker, I'm instructed by the Senate to inform the House of Representatives that the Senate has taken up and adopted Senate Resolution 1. Respectfully, Christina Martin, Secretary of the Senate. Senate Resolution number 1. Be it resolved by the Senate that the Secretary of the Senate inform the House of Representatives that the Senate is duly convened, is now in session as provided by Article 3, Section 32 of the Constitution, and is ready for the consideration of business.
Gentleman from Greene County.
Thank you, Mr. Speaker. Next order of business is announcements.
Announcements. Gentleman from St. Charles, the Teapot District.
Thank you, Mr. Speaker. I rise for the purpose of making an announcement.
Proceed, gentlemen.
I am hopeful that the body can join me in congratulating the St. Elizabeth Ann Seton Parish, celebrating its 50th anniversary this Saturday. However, this is a special moment for our state and our state's history because St. Elizabeth Ann Seton, Mr. Speaker, was the first United States resident saint ever canonized, and the very first parish named after her on the day of her canonization in Missouri was St. Elizabeth Ann Seton Parish in St. Charles City, which is my parish, and it will celebrate the 50th anniversary of that parish this Saturday. Thank you, Mr. Speaker.
Further announcements. Seeing none, gentleman from Greene County.
Thank you, Mr. Speaker. I move that the House convened in veto session of the 103rd General Assembly, first regular session, stand adjourned, sine die, pursuant to the Constitution.
The gentleman from Greene County has moved that the House convened in veto session of the 103rd General Assembly, first regular session. All those in favor of approving the gentleman's motion will signify by saying aye. Aye. All those opposed, no. And the ayes have it. The House will stand adjourned.